The health of the manufacturing sector is showing some signs of improvement. The ABSA Purchasing Managers Index, measuring the health of the sector, has rebounded in August after a steep decline in July. The PMI rose to 57.9 points in August, up from a very low 43.5 points in July. A reading above 50 indicates expansion in the sector, while a number below 50 indicates contraction. ABSA says the normalization of demand and output for businesses affected by July's looting and less strict lockdown restrictions supported the recovery. Both the business activity and new sales order indices erased July's losses. Business activity came in at 58.5 points and new sales orders at 60.9, both about 30 points better than July's print. Respondents also turned somewhat less optimistic about business conditions going forward. The index tracking expected business conditions in 6 months' time fell to 59.7 from 64.3 in July. Well, for more on this, I'm joined by ABSA senior economist Miyelani Maluleke. Good afternoon, Miyelani. So the 57.9 index points was quite a rebound on July. Does that represent a broad-ranged improvement across the areas that you measure?
It certainly was broad-based. I think the one area that was a little bit disappointing for us was the employment sub-index. Because you'll remember that in July, we also did see a big drop in that particular index. And, we were expecting that with some lockdown restrictions having been eased, with the fact that the unrest is now also behind us, we wouldn't just see an improvement in activity, but we would also see a little bit of a recovery in employment. But unfortunately, it seems like the job story in the sector is still under quite a bit of pressure at this stage. But I think in terms of underlying business activity, it really is quite encouraging that given the weakness that we saw in July on the back of those challenges that we've had, it does seem like in August we've certainly seen a pretty strong recovery.
We know that the index does track what's happening on a month-on-month basis, but just to your point around the employment index, when you look at that in the, say, the medium to longer term, there's still that contestation between whether firms hire human beings or machines. Do you think that's going to continue to be a factor?
I think it's always going to be a factor, and the truth is that it's one of those things that tend to be sort of slow-moving variables in a way, in that manufacturers cannot very quickly replace labor with machinery, for instance. But if over a very long period of time, manufacturers start to think that it makes more sense for their businesses to have that sort of replacements, then you could certainly see that over time, particularly if you do get labor cost increases that tend to significantly outstrip productivity, which is what we've seen a lot here in South Africa. But it's always a slow-moving variable, and I think for us, of course, as South African analysts, looking at the South African economy, looking at the unemployment numbers that we've seen from Stats SA just in this last couple of weeks, the fact that we're seeing this particular reading being as weak it is, just tells us in the very short term, at least, we probably shouldn't be expecting a significant improvement in this job story.
I do see from the index that previous inflation pressures were subdued, but August registered some inflation. Just tell us more about that.
I think a part of this reflects that big fuel price increase that we saw. You'll remember that at the start of August, there was petrol price increase of almost R1. Diesel prices were also up quite significantly. But when you look at August on average versus July, we also did see a little bit of exchange rate depreciation. So we just think that there may be some import cost inflation that may have also come into play here. And just when you look at that particular index in general, it certainly has been running a little bit high. I think there is a clear indication coming from there that there are some cost pressures that some manufacturers are experiencing right now. But positively for us as consumers, those cost pressures don't seem to be passing on to consumers in any broad-based fashion. But it is a concern, of course, that over time, if these cost pressures remain high, pressure will build onto firms to start passing on these cost increases onto consumers.
Yeah, we've got about 2 minutes left. A two-pronged question for you. We know that the international market is important for our exporters. What's your reading of that? And with talk of a possible fourth wave of coronavirus infections in the country sooner rather than later, and talk of a new variant as well, what does that do to the manufacturing sector in the short term?
I think it's a big concern for sure, and you certainly see it in the expectations sub-index of the PMI. And what you're seeing here is that although activity was up in August compared to July, manufacturers' expectations for what the next 6 months could look like were actually down a little bit. And I think that some of this reflects these renewed concerns about the durability of the global economic recovery in the face of this, fast spread that we're seeing in the Delta variant of COVID-19. So that concern is certainly there, and I think it's certainly a risk that we need to keep a close eye on over the next few months, because the global environment has been very important for the overall pace of the recovery in South Africa since the start of this pandemic.
Miyelani, thank you very much for your contributions as always. Miyelani Maluleke, he's a senior economist at ABSA.